on a year-on-year basis. But let's get the management on board and speak to them about the growth roadmap ahead. Dilip Banthiya is joining us, the CFO of Radico Khaitan, now joining us. Hi, good morning, Mr. Banthiya. Thank you so much for taking the time out and joining us today.
So thanks for having me on your channel.
Right.
Yeah, it has been a stellar quarter. It has been a stellar quarter from all angles. Our top line, EBITDA margin, and gross profit all has grown. The main focus area has been the P&A category, which has grown by 36%, and we have achieved a volume of 5.22 million cases in P&A. Overall volume for the first time of 10 million cases. The EBITDA has been all-time high of 348 crores, which is up by 51%. EBITDA margin has expanded by 536 basis points from 15.3 to 20.7, and all-time high record PAT of 225 crores. This has been on the back of the premiumization. We see a great shift happening in the drinking habits of the people. The main this thing has been the widespread globally is 28%, but in India it is under-penetrated, and the Gen Zs and all that, there is a shift in their drinking habits, because of which 2 years back the widespread was just 3.7%, and last year it was 4.5%. This quarter it has been 6%, and a 1% shift in widespread is 4.5 million cases. Radico being market leader with Magic Moment and family and various flavors. So we have hold around 60% market share. There has been good growth because of innovation in flavors of India. So I think the growth momentum is continuing.
Okay, so the growth momentum is continuing. That's the word coming in. Mr. Banthiya, morning, Shesha this side, and apologies for keeping you waiting. But let's also talk about the prestige and above segment, because you've reported very strong growth of about 36% on a year-on-year basis. But how much of that is sustainable in the second and the third quarter? If you can take us through your volume growth outlook, especially for the prestige and above, that's the P&A segment for you.
So we see the momentum of the P&A category to continue. And earlier our guidance of the P&A category was 50 to 20%. Now that guidance has also been upgraded to 25% growth for the financial year 27 in the whole of the P&A category. So we are very optimistic about our premiumization journey. Various brands which have been doing extremely well. We have very recently launched a new package of the After Dark Deluxe Whiskey. It is a 17 million cases market. I think we are going to address it very well. The 8 p.m. Premium Black, after the last year's rejuvenation, and the new packaging is doing extremely well in many markets. So we are extremely positive about the growth momentum, and 25% growth in P&A is very much achievable in financial year 27.
Okay, so it is pretty much achievable. That's the word coming in. And you've given a revised guidance of 25% now for the full year. That's the volume growth guidance for the prestige and above segment. You spoke about several factors, but what really has changed in the last 3 months that has triggered this kind of increase in guidance from your end?
See, as I said, that all the brands in the P&A category, especially the premium brands, all are doing extremely well. Our Rampur Indian single malt is doing extremely well. We are taking a spread in our on-trade channels and all that. Jaisalmer Indian craft gin, where we are the market leader with more than 50% market share in that category, is also doing very well. The new package of the limited edition of Royal Ranthambore, which is 6 tigers, legendary tigers, that is also very well accepted in the market. And as I said, that our deluxe whiskies and all that are doing extremely well. So the growth momentum continues, so we are confident to deliver it. And moreover, as I said, that the saliency of the vodka is improving, and Radico being the widespread leader, we are the biggest beneficiary of that change in people's drinking habit.
Okay, so that's as far as the growth outlook is concerned. But if you can take us through what kind of revenue growth are you looking at for the company in FY27? Because now that you have revised your guidance on the volume front as well, if you have a figure for a revenue in FY27 to work with.
In this quarter, we have delivered 12% top line growth, and in IMFL section, our growth has been 18%. And we are confident to deliver 50, the growth for the whole year in this in line with this current quarter. So the top line growth will also the momentum will continue, and the main driving force will be the P&A category.
While we are talking about the P&A category and you're telling us that it is expected to be a driving force, let's also talk about regular and others, because this also contributes about 25 to 30% of your total revenue pie. And over here, volumes have declined YOY. What led to this, and how much of this is reversible going forward?
Yeah, so this degrowth in the regular category has been on account of some state-specific policies, and especially in Maharashtra after the introduction of the MML category, the mass brand has been under degrowth. Same Karnataka, there has been some price increases in the mass brands and all that. Because of that, the industry is down. Andhra Pradesh, which has seen a big growth after 24 change of policy, that has also been nullified. So I think the growth and the it is state degrowth is state specific, and from here onward we see that we can see the 3 to 5% kind of growth in the regular category as well.
3 to 5% growth for the regular category as well going forward. That's the expectation. Shifting focus from volume then to raw material pricing trends. What are the trends that you're seeing when it comes to raw material pricing? Because I believe you have now given EBITDA margin guidance of about 20% for the full year FY27. Has West Asia or any other concern been a problem for raw material prices?
So the raw material has two components. One is the grain and ENA, and another is the packing material. Because of the West Asia crisis, the packing material prices have gone up. The glass price have gone increased by around 15%. PET resin is again increased by 13 to 15%. And because of that, there is a negative impact of around 30 crores in this quarter. In spite of offsetting all these impact, the benign scenario of grain and ENA has given that positive, and after offsetting, I think 75 basis point is the improvement on the gross margin on account of between raw material and packing material.
So that's as far as the raw material pricing trend is concerned, but your deleveraging roadmap also continues to remain intact because the net debt has now come down further to about 106 crores at the end of first quarter. You've also said that you're all set to become net debt free by the second quarter. In that case, do you have any capex plans, and how will that be funded, and will that have any impact on the debt figure going forward?
So our cash generation is quite robust. And actually, we have given that 138 crores of debt has been repaid from March 26. And I think by Q2 of FY27, the company will be net debt free. Basically, the EBITDA, which has been, we have guided earlier that we will grow by 125 basis point every year for next 2-3 years. But this has been achieved in this quarter itself. And I think because of the buoyancy in our P&A category, we are confident to deliver and have guided that 20% margin, EBITDA margin for the whole year is sustainable. So we are very, as far as the capex is concerned, we don't have a large capex now on pipeline. The regular maintenance capex and capital efficiency capex, debottlenecking capex, and all that are in the range of around 150 to 170 crores rupees annually for next 2-3 years. So those will continue. So free cash flow will be robust to take care about it.
So no large capex, but you have capital expenditure for regular maintenance of about 150 to 170 crore, and most of it will be funded via internal accruals. One last question, Mr. Banthiya, before we let you go, and that has to be on new launches that are lined up. Any new product launches in the coming months, and any new geographies that you're looking to expand into?
New launches, actually, our R&D team keep on doing innovations, and I think we will continue to drive the innovation in widespread spaces and in time to come. And as and when that happens, we will disclose that. As far as the another category, we have had a joint venture in Diavol Spirits, where the Radico hold 47.5% equity. And I think in that, by in the H2 of current year, we are going to launch a range of tequilas. So that is the another pipeline which is going to come in the second half of this year.
Okay, so many more product launches lined up in the second half of the year. That's the word coming in. Mr. Banthiya, thank you so much for taking your time out. And once again, sincere apologies for keeping you waiting. Thank you for joining
Thank
us
you.
today.